How well do you know the chart of accounts? Let's find out. I'm James, you're watching Accounting Stuff, and today I've carefully prepared 20 multiple choice questions for you. You know how this works, grab your pen, play along, and remember to share your score at the end. This video is sponsored by QuickBooks Online. Question 1. In financial accounting, what is an account? Is it a password protected login for accessing accounting software? A list of customers and their contact details? Is it a log used only to record bank balances, or a record that summarizes changes in a specific financial item? It's D. An account is a place where a business records, sorts, and stores all transactions that affect a related group of items. Question 2. A chart of accounts is an organized blank of every account held in the general ledger. Is it a directory, a catalogue, a list, or a statement? It's C. The chart of accounts is a list that provides a structure for recording transactions and preparing financial statements. Question 3. Which of the following would not appear in a chart of accounts? Cash, accounts receivable, income tax payable, or customer contact information? The answer is D. Customer contact information is not a financial account, so it wouldn't appear in a chart of accounts. Question 4. The chart of accounts groups accounts by type, department, payroll cycle, or transaction date. It's A. Accounts are usually grouped by type or category. Question 5. In most systems, each account in the chart of accounts has a reporting segment, a unique account number, a cost center, or a functional area. It's B. Account numbers are assigned in ranges based on their account categories. Question 6. Why do many businesses use account numbers instead of just account names? Is it to simplify sorting, searching, and reporting because accounting standards require account numbers? Is it to hide sensitive account information, or to prevent accounts from being modified? It's A. Account names can be inconsistent, but numbers keep everything structured and easy to reference. Question 7. Which statement is true about customizing a chart of accounts? It must follow a fixed global numbering standard. It can be customized to suit the business's reporting needs. It can only be updated at year end, or it must match the bank statement layout exactly. It's B. The chart of accounts is flexible and can be tailored to suit the needs of different businesses. Before we jump into question 8, I want to shout out today's sponsor, QuickBooks Online. Setting up a chart of accounts can be tough. Every business is different, so there's no one-size-fits-all way to do it. And if you're a small business owner, you might have even tried building one in a spreadsheet. But seriously, don't waste your time. Get yourself some accounting software. QuickBooks automatically sets up your chart of accounts for you and then lets you customize it to fit your needs. Everything is beautifully laid out before you in a table with your account names, types, subcategories, and clear tags showing whether each account belongs in the balance sheet or the P&L. Adding a new account only takes a few seconds, so you can update your chart of accounts as your business grows. You can try out QuickBooks Online today using my link in the description to get the latest discount or a free trial. Thanks to QuickBooks for supporting my work and for sponsoring this video. Question 8. Why might a business choose to increase the granularity of its chart of accounts? Is it to reduce the number of journal entries required? To simplify the chart of accounts by removing categories? To gain more detailed financial insights for better reporting? Or because the number of employees has increased? It's C. Increasing granularity adds more detail to the chart of accounts. This helps a business track specific financial activity. Question 9. How are account categories typically arranged in the chart of accounts? Does it go assets, liabilities, equity, revenue, expenses? Revenue, expenses, assets, liabilities, equity? Liabilities, assets, revenue, expenses, equity? Or is it equity, assets, revenue, liabilities, expenses? The answer is A. This order follows the accounting equation. Assets are equal to liabilities plus equity. Revenue and expenses flow into equity, so they appear after it in the chart of accounts. Question 10. Which of these is a type of asset? Sales revenue, accounts receivable, retained earnings, or owner's drawings? It's B. Accounts receivable represents money owed to the business by its customers. It's an asset because it provides future economic benefit. Question 11. Which of these is a liability account? Is it inventory, bank loan payable, wage expenses, or interest expenses? B again. Bank loans payable represent money the business owes to a lender. It's a liability because there's an obligation to make an economic sacrifice in the future. Question 12. Which of the following accounts would typically be grouped under equity? Is it retained earnings, prepaid insurance, goodwill, or cash? It's A. Retained earnings are a business's accumulated profits held for future use. It's an equity account because it belongs to the owners and increases their claim on the business. Question 13. Which of these is not a revenue account? Service revenue, interest income, sales revenue, or accrued revenue? The answer is D. Accrued revenue is a type of asset. It represents revenue that's been earned but not yet billed or collected. Question 14. Which of these is not an expense account? Cost of goods sold, depreciation expenses, prepaid expenses, or utility expenses? It's C. Prepaid expenses are also assets. They represent payments made in advance for products or services that will be received in the future. Question 15. Why would a business create sub-accounts? Is it to reduce the number of accounts, to comply with government-mandated account structures, to provide more detail under a main category, or to hide transactions from the general ledger? C again. A sub-account is a smaller, more specific account that sits under a parent account in the chart of accounts. Question 16. Which of the following is not a contra-account? Is it accumulated depreciation, sales returns, allowance for doubtful debts, or accounts receivable? It's D. A contra-account flows against another account and reduces its balance. Question 17. Which of the following is an example of a control account? Is it cost of services, sales revenue, accounts payable, or rent expenses? The answer is C. A control account summarizes the total balance of a group of related, detailed accounts in a subledger. Accounts payable summarizes supplier balances. Question 18. Which type of account is a service business least likely to include in its chart of accounts? Is it service revenue, accounts receivable, work in progress, or wage expenses? C again. Service businesses don't produce physical goods, so they don't use a work in progress account. Question 19. Which account would you expect to find in a retail business? Cost of goods sold, work in progress, raw materials, or manufacturing overhead? It's A. Retail businesses buy and resell finished goods, so they use cost of goods sold on the income statement. Question 20. Which account would you expect to find in a manufacturing business? Is it consulting revenue, finished goods, unrestricted funds, or membership fees? It's B. Manufacturing businesses produce physical goods, so they use finished goods to record inventory that's completed and ready to be sold to customers. Bonus question. Which account would you expect to find in a non-profit organization? Is it share capital, retained earnings, net assets without donor restrictions, or additional paid-in capital? It's C. Non-profits don't have owners or shareholders, so they don't use normal equity accounts. They might, however, use net assets without donor restrictions to represent resources available for general use. How'd you go? Drop your score in the comments below. Do you want another challenge? My accounting quiz playlist is waiting for you over here. See you in the next one.